Welcome to the August 17th, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowanGroup Asset Management, serving families around the nation from Dallas, based at the Crescent. Come see us and meet the team that cares. Yes, we're safely operating. You get a free temperature check, free mask, free hand sanitizers. Come down and see us if you like, or the Zoom meetings are incredibly advanced for planning sessions and for clients, updated financial plans now that we've been through the pandemic. This is the Dow year to date. That's usually where we start because we see the 35% decline. Actually, the total was about 38% intraday. And, you know, here, lots of investors were selling or tempted to sell and getting whipsawed out. Here's the recovery so far, which has amazed most investors, including me, that the Dow would have approached 28,000 year to date. The yellow line you see is total return. Dividends on the Dow, about 2%. That's on top of the white line, closing the week at about 27,700 or so. So this rebound is part of the story for the market. Why? Because companies like us are learning how to safely operate, and investors learning to deal with the pandemic and moving to a new phase. Now, where we've been, if we look at total employment, jobs are a big issue. Tragically, 26 million jobs lost, but temporarily, according to this chart. We went to 159 million total employed before the pandemic. One of the best increases in labor force and, of course, low unemployment, record wage gains that we see here. And, of course, it went parabolic from 2016. The interesting part here, after you lose 26 million jobs, you've already regained 9 or 10 million jobs from that low point. The numbers that we get next month for the month of August, this is 3 months, 9 million jobs, average 3 million a month, but that's going to slow down. So that's more of the Nike swoosh recovery that you've heard, the V recovery versus a Nike swoosh. Well, this is a V, but it probably turns into a swoosh with fewer jobs added each month, but still likely 1 million or 2 million depending on the circumstance. 3 million jobs added average for 90 days. The other significant number this week, 500,000 more jobs available. We went to 5.9 million jobs available. That was actually the number back here in 2018 or so, the number of jobs available to choose from. That means you'll be adding people back into the workforce, and the number of jobs available increased by 500,000. That good news says we could reach record employment late 2021, 2022, at the latest probably early 2023. This is the NASDAQ. These are COVID immune stocks. Amazon, Apple, Netflix, Google, Microsoft, beneficiaries of the pandemic. Zoom as well, which we traded in our growth accounts. Remember, it's not a recommendation for your portfolio until you come down and get a plan, but we will discuss specific securities, not necessarily a recommendation because we may change our minds, right? And here we go. We've actually got a QQQ index, that's the NASDAQ 100, mainly made up of the technologies, went parabolic. Obviously, COVID immunity was what everybody wanted through about mid-year. Does that change? Well, there is a premise by Bill Miller and Jim Cramer that we're going to shift into a value approach instead of a pure growth approach. Because in retrospect, if we look at the last 30 years of my career, we are overpaying for the best names in technology. And that becomes a religion, the FANGS index, if you will. And that may change as we move forward, and I'll show you some evidence here. Now, gold was also part of the $6 trillion infused in liquidity. Federal Reserve adding about $4 trillion, the stimulus adding about $2 trillion, and of course gold being the inflation hedge, or if everybody's in a panic, it's a place to go. Well, remember, gold has had 20-year periods where it declined by 2/3. That was actually 1981 with the inflation until about 2002. It actually lost 2/3 of its value while inflation doubled prices. So it's not always a good inflation hedge. But that cracked this week, a pretty significant crack, 2075 down to about 1875. So about a 10% correction. I don't know if that signals the end, but I don't really care because I don't own gold because I don't get paid. You know, if I'm not going to get paid, I'd rather own rare coins or something. But that's not the asset I want to own because it's hard to predict the price. In 2011, they said inflation would come back. Gold was 1900. It bottomed actually recently in 2016 at 1500. Then it goes to 2075. Price speculation, and it's very hard to carry enough gold around to pay for a car. Well, that leads to Bitcoin, where you can actually pay for stuff. And this cryptocurrency, Alex pointed out this week, Alex Tolene, head of client development, one of our team members, a great trader, he pointed out Bitcoin's interesting because they've capped the number of Bitcoin that can ever be created at 21 million, which eventually says it could be appreciation. I like that better than gold if I had to choose between the two, but it also indicates here you have an alternate currency because they put lots of dollars in there. All right, here we go. Real estate down 6% for the year. Big housing boom is contributing to the fact that the REITs haven't really corrected that much. Now we go to regional banking. The regional bank's down 30%. Comerica here in Dallas is down over 40%. You know, I think you're going to see a lot of rental defaults. You can't have evictions, and the executive order extended that. So you've got about 6 months of really bad news from real estate. That's one that might become interesting somewhere between December and February, but it may have another 30% to go on the REITs. Now we look at a couple of things. Natural gas woke up notably from $1.40 to $2.20. Here's the oil price recovery. There's the low of the pandemic, minus 37 a barrel. It had never been at a minus price. And 55 is a projection we discussed for next year. Restoration of energy demand, August of next year, is the likely reason. Now here, we look at a long-term graph. What's the potential for oil? 2008 was 140. After the over-regulation in the past administration, oil got to over 100. And of course, currently about 42. What does that mean for investors? As we move into cyclicals, a few interesting undervalued value stocks, energy, medical dividends, trading in many cases at 10 times earnings or below. That's our focus for the equity markets. The global high yield markets will have another update next week. So be sure to subscribe to YouTube McGowan Group, and you'll get the weekly update. This is designed to take you to the next level of understanding and great decisions as an investor. We're devoted at McGowan Group to excellence in service and superior client profits, as well as the research to help you get to not only your long-term goals, but also investing successful decisions. And hopefully we've preempted some anxiety this week. Thank you again. I'm Spencer McGowan, President, McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.